a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi, everyone. Welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about expansion of the ultra popular NASDAQ 100 ETF, which is popularly known as QQQ or the Qs or triple Qs. So, this is one of the most popular ETFs in the world with over 140 billion in assets. It is also one of the most actively traded ETFs. And it is also one of the best performing ETFs of the past decade. And it continues to lead the market this year as well. And in fact, most investors think of QQQ as a tech focused ETF. It is actually a large cap growth ETF. So, although it has a lot of exposure to technology, but it holds many other companies, growthy companies from other sectors too. In fact, it holds 100 largest non-financial companies that trade on the Nasdaq index. So last week, Invesco expanded the QQQ suite. QQQ currently accounts for about 42% of Invesco's ETF assets. It's been a mega success for Invesco. So, to try to capitalize on QQQ's success, they launched four more funds, two ETFs, one mutual fund, and one unit investment trust. So we will take a look at QQQ, what QQQ holds, and what the other two new ETFs hold, and whether they are more suitable for your portfolio. So let's start with QQQ. So the first one, the big one, QQQ, as I mentioned, it holds 100 non-financial stocks listed on the Nasdaq exchange. It follows a modified market cap weighting scheme. So basically using market capitalization and then using certain caps so that just a handful of stocks do not get a lot of weight in the portfolio. It charges 20 basis points expense ratio, and it has 143 billion in assets, as I mentioned, one of the most popular ETFs. To learn more about this ETF, you can go to the quote page on Zacks.com. You can read our research report. I had also done a podcast with the sponsor Invesco some time back, so you can listen to ETF Spotlight podcast for that episode. Then you can go to the external homepage using the link on Zacks code page and go to Invesco web page for this ETF, and you can learn a lot more about this ETF, as you will see that it is tech heavy. Information technology accounts for 48% of the portfolio. Communication services, which basically holds the sector holds Google and Facebook, Netflix. Those stocks occupy about 19%. Consumer discretionary is Amazon heavy, that those occupy about 19% of the portfolio. Looking at the top holdings, you will see Apple, Microsoft, Amazon, Facebook, Google, and Tesla. Now, all big tech stocks have led the market this year, so that has contributed to QQQ's outperformance too. And other major indexes do not hold Tesla. Even S&P 500 has not included Tesla so far. So Tesla's exponential surge also contributed to the ETF's gains. NVIDIA is also one of the best performing stocks this year in the market. Now, the second one, the new one, is called QQQM, Invesco Nasdaq 100 ETF. It is basically a lower cost version of QQQ. So QQQ charges 20 basis points. This charges 15 basis points. So Invesco is obviously making it attractive for long-term focused investors by making it cheaper and also a lower share price. Now, share prices actually don't matter unless you want to invest less dollar amount at a time. They track the same index, so their performance would be the same. This launched just last week and has already gathered 286 million in assets, and I expect assets to continue to grow for the CTF because it's just basically a cheaper version of QQQ, as I mentioned. Now, again, you can go to the quote page on Zacks.com, and quickly I'll show the share price. You will see that the older QQQ is trading around 285 currently. QQQM is about $117. So if you want to invest smaller dollar amounts at a time, then probably you can take a look at the CTF. And you can go to the web page, Invesco web page for the CTF, but it is basically the same. It has the same holdings, tracks the same index. It is just a cheaper and lower share price version of QQQ. So if you are a trader and you want a lot of liquidity, if you want to trade in and out of the market, then QQQ is the ETF for you because of its liquidity. But if you're a buy and hold investor, then QQQM makes a lot of sense because of lower cost. Now, the third one that also they launched last week is called QQQ Next Gen 100 ETF. The ticker symbol is QQQJ. So it holds the largest 100 companies which are not included in the QQQ, the next largest 100 companies. So obviously, these are smaller capitalized, mid-cap companies, not as well known as the ones that we saw in QQQ. This also charges 15 basis points, about 70 million in assets so far, but very new. It will gather assets, I'm sure. Again, you can go to the quote page on Zacks.com, and from there, the external homepage. To learn more about this ETF and its portfolio, what it holds, so pretty similar in terms of exposure. Information technology, almost half of the portfolio. Like QQQ, it has substantial exposure to healthcare too, about 20%. So you'll get a lot of biotech companies probably there. Then consumer discretionary and communication services, they get lower weights in the portfolio. Now looking at companies, Okta, Marvel Technology, Trade Desk, Roku, some of the hot companies, cloud computing, cybersecurity, those kind of companies you will see in the portfolio. Now, on the next slide, I have the comparative performance, and I have taken QQQ's competitive performance because QQQM is basically the same and QQQJ is too new. And I have compared the performance with the other two major index ETFs, the one which tracks the S&P 500 index and the one which tracks Dow Jones index. And you will see that QQQ has significantly outperformed the other two. It is up more than 32%, whereas the S&P 500 is up about 7%. The Dow Jones is almost flat for the year. And on the next slide, I have the past 10 years performance. And you will see that the NASDAQ 100 index and the ETF has trounced the other two major indexes. It is up more than 500% over the past decade. And as I mentioned, it is one of the best performing ETFs of the past decade. The S&P 500 and the Dow Jones ETFs, they are up between 220 and 260% over the past decade. Thanks for watching. In full disclosure, I own QQQ in my personal trading portfolio. Make sure to check out zacks.com/promo for an interesting offer. And also sure to subscribe to our videos so that you do not miss anything. And I'll see you next week.